that was one heck of a start to this week. We saw the stock market open down for the Dow, falling over 700 points on Monday. It was the worst drop since October. And then on Tuesday, they pretty much made all of that back with the quick rally. There was a nice rebound, and investors were blaming it on the Delta variant on Monday, but then maybe the Delta variant wasn't as bad on Tuesday. I mean, these are the types of whipsaws that we're seeing in the market right now. And as an investor, you can only sit back and just kind of watch and let all this play out. But as a trader, these are the types of trades we love because there's a lot of volatility. Well, and that means a lot of opportunity in the market. When stocks are moving, there's money to be made. And when we see stocks dip like that, these videos that I do each week on this bank it or tank it stocks that you all recommended. This week I got stocks from Jim, Cynthia, Brian, several others that we're going to feature for our quick takes today. But again, it's all part of my broader bank it or tank it analysis, where we look at stocks and just figure out whether or not you want to bank on them going higher, or they're stocks that are set to tank and head lower over the next few months. But in these videos, my quick takes, we're going to run through about 5 stocks. I'm going to hit them quickly, just looking at the charts, just to give you some quick levels to watch, let you know how I feel about the stock. But more importantly, we have these key levels. And I've talked about this before, and these are the things that we want to pay attention to, because on days like this, when it drops, you'll see on some of these charts that they were great opportunities, holding support. You would have jumped in and bought, or they were breaking key support and you would have set back and taken a break to see what was going to happen next. So I'm Chad Shoup, and today I'm ready to dive into our quick takes. But before I do so, I just want to give you a chance to scroll below, click subscribe, because each week I'm going to feature new stocks. Sometimes we feature just one stock, sometimes we feature 5 stocks in our quick takes. But at the end of it all, we're just here to figure out whether or not we think the stock's going to continue to go higher, which would be a bank it stock, or a stock that's going to continue to head lower, which will be on my tank it list. And then from there, I've shown you before how these flip-flops. I'm going to keep updating you throughout the weeks, letting you know what stocks are on my bank it or tank it list and how to trade those going forward. So be sure to subscribe so that way you don't miss out on any of my upcoming videos. And at the end of the video, if you enjoy it, be sure to hit the like button to let me know. And the number one priority I want you to do is scroll below and leave me a comment. Let me know what stocks are on your radar so that way I can feature them in an upcoming video. So I've been doing at least one of these a month, but got several questions, even on my mailbags. People wrote in, let me know what stocks they wanted me to feature. So I'm going to do one of those next week, another quick takes on some of the stocks that have been coming in through the email. So it doesn't matter how you let me know, just let me know what stocks you want me to feature, and I'll be sure to add those to my list to bring them up very soon. So let's get started today. Again, we got 5 stocks that we're going to run through, and our first one is Inseego. So this is a tech stock that we want to take a look at to figure out how we expect it to go from here. And you can see I add these colors to the chart, to the candlesticks, that let us know where the stock is relative to the overall market. And red means that it's lagging. That means that it's trailing behind it. But what we've learned by following this rotational graph is that the stocks tend to move from pattern to pattern in just about a week or two. So we see that the stock goes from lagging to improving, which is blue, and then leading the market, which is green, back to weakening. So then we start to see some weakness, back to lagging, and then we're looking for it to go back to improving, leading, and so on and so on. You get the idea. But this is very evident across all sorts of stocks in all sorts of market environments. So it doesn't matter whether or not the S&P is going up or down. We just see stocks around that rotate through these 4 phases of the market. And we can use that to help predict where we think prices are going to go next. So for Inseego right now, it's showing that we're looking for a short-term rally. But I'm not sure how big that rally is going to take it. So had a sharp sell-off. But since then, it failed to make a higher high. So I'm a big fan, if you've been following me, of trends. I don't like fighting the trend, at least until we break some key levels to watch. And even when we connect to tops here, this is just simple trend line drawing. And we'll make the top red for resistance. But it gives us an idea of what kind of patterns the stock is trading in. And then across the bottom, we can draw a key support. So this is a basic wedge pattern that the stock's starting to trade and be bounced around in. And that's why it's kind of coming in the picture here that we could see a rebound. This has the closes as of Monday, but on Tuesday, I have the closing price pulled up. I'm recording this after the close. Just my chart hasn't been updated yet, but it closed about 848, which is about where my cursor is now. So not a big move. It didn't see a big drop on Monday when the rest of the market did. So that was great to see. It didn't fold below my key support here, and it's holding above that. So this is one that you definitely want on your watch list. And you know what? I'm going to put it on my bank it list for today. And that's because on Monday, when the rest of the market was selling off, it held above this key support. It's in this wedge pattern. I don't like that it's trending lower with these lower highs throughout the chart, but is in a position to make a higher low. So as long as it can do that, it's going to be on my bank it list for today. We're going to look for it to bounce around on this wedge a little bit, eventually break out, and then the expected target price would be the height of the pattern. So we're looking at about a $4 height of this pattern, taking the low and the high of the chart that we're looking at, and then you add that to the breakout. So if it breaks out at about 10, you're looking at it shooting up to about 14 bucks in a matter of weeks. So a nice 40% rally here for Inseego. As it's on my bank it list, so we'll keep an eye on that. But again, I've been known to flip my charts quite a bit and change up my analysis. So if this breaks below the support, then all bets are off. I'm going to take a look at it again and we'll change it. But for now, it's on my bank it list and want to keep an eye on. Our next stock is going to be the John Deere tractor company, basically the green tractors that they're famous for, but it's definitely a much larger company than that with farming and agriculture. And look at the stock. It's on a massive rally here for at least over the last 12 months or so. Nice rally. And this is a big play on the whole economic rebound, a big sell-off. Now up here we're getting a little bit of weakness. It's pulling back and went through the lagging quadrant. Tried to go improving and make this rotation. Fell back into lagging. Right now this is going to be on my bank list because, again, I don't like fighting the trends. The trend for this one is definitely heading higher. Look at that rally in the stock. Yes, it's breaking some support lines that you could draw all the way through here. But at this point, we had the correction in the stock. Now it's kind of leveling off, and then I'm expecting it to slowly ramp up from here. So never assume that the top of the chart is resistance. You can pull this out and expect the stock to continue to climb. Once it hits new highs, gets back above $400 a share, the sky's the limit for the company. I'm not expecting it to take off because it is a giant stock, and it's already been on this massive rally, doubling in just basically a matter of months. But it is one that I'm expecting to go higher. If I want to draw a key area to look, it's just going to be the lows here that we saw back in June. I really don't want the stock to fall below that. I want it to stay above this, so that would be my key support that I'm watching. And on the upside, this little consolidation that we saw here, we wanted to get back above that to kind of confirm that we're in the recovery phase of this correction. I mean, you see where the stock closed. That was Monday. That was a big drop in the market. It was able to rally back up to about 348. So it was back up in here, back up into this zone that I was telling us to watch on Tuesday, and then we'll see where it goes from there. But for now, that was bullish to see. And when you can start drawing this as a nice little upward support line, that way we get some traction. It'll give us a key level to watch going forward. So John Deere on my bank it list. Our next stock is going to be Caterpillar, which is another giant. Both of these actually came from Jim, so he's interested in these stocks. He knows what he's looking at. And look, the price chart is very similar. We have a big run up here. Stocks in a phase where it doubled here in less than a year, then started to pull back. Again, we got the correction. So I have a similar take on this one as well. Went through lagging, back to improving, then dropped again. On this drop, that's Monday. On Tuesday, it's back up to about 207. So it was able to make up a lot of ground. We want to see that momentum kind of continue to build, because even though we had this drop that we saw on Monday, that could be the start of a downtrend. So I don't want to get caught up in that. The rally that we got on Tuesday put us back above this key support, which is the previous low. So let's use that, about 206, as kind of our line in the sand that we want to see the stock, Caterpillar, hold above. And I'll generously put it on my bank it list because of that, because it did see a little bit more weakness here compared to John Deere. They're similar stocks, similar industries, but when you look back at the chart, this is a more volatile stock. Caterpillar's seeing a bunch more whipsaws compared to John Deere. So this stock, it's going to be volatile. I'm going to have it on my bank it list. I do want it to stay above that price, about $206.40. So that's going to be my line in the sand to watch for Caterpillar, but it will be a bank it stock for now. Now our next stock is going to be Alibaba. And this is basically the Amazon of China, right? This is, I'm sure you've heard of it. Look, they've been in a downtrend, clearly not as strong as some of the agriculture stocks that we were just looking at, the industrial companies with Caterpillar, John Deere. It's been sliding lower. This is October 2020. Just been on a downtrend since then, and we can start drawing in some key trend lines here just to have on our radar. This is a pretty sharp downtrend to keep an eye on, and I like to use red for my resistance points. And then we have a nice, basically falling wedge here. Some volatility there that's going to be choppy for the support line. But what we see is that it is a declining wedge pattern. Now, the breakout from this could go either way. We are expecting a breakout, and I'm going to look for this stock to really make a big move here in the coming weeks. I like that it's narrowed down here on the chart. That means we're getting to the end of this wedge pattern. Then a breakout to the upside, to the downside is really going to kick off the next big trend. So I want to wait. I want to see this breakout. For now, it's going to be on my tank it list because it is making lower lows consistently. That's 3 in a row of kind of some major lows being below the previous low and then the highs. After peaking in October 2020, it's been lower highs, lower highs, lower highs. So we're not getting that bullish momentum yet. Of course, this could be a wedge that's setting up for a reversal to get us going back in the other direction. But for now, I don't want to get stuck catching a stock that's about to break down to the downside. So this stock's going to be in my tank it list until it can start to get above this resistance area. And you can see that this line's not set in stone either. That one may be a little bit stronger to look at. But this one, you're going to have some flexibility here. Don't trade it just because it's testing it, trading in the area. Wait till we get a clear break and then ride the trend from there. So Alibaba, it's going to be in my tank it list for now. Target to the downside. It could fall about 50% from here. That seems sharp. I know China's going through some tight lockdown stuff, some issues with their tech companies and public IPO listings and all that. And Alibaba, while they are the Amazon of China, if the government decides to crack down on them, they are going to be in some trouble. So I don't know if any of that's going to actually come to play out. Just looking at the height of the pattern here, this stock could really fall almost 50% from here before it would hit the actual price target. So for now, I just want to wait and see it break out. We'll leave it on the tank it list. Now our last stock came from Maria, and she wanted me to look at ticker AB, AllianceBernstein, and this company has been on a nice rally that we've seen here on this chart, and that's a very solid upward price channel. I know that they say, a lot of people tell you trend lines don't matter, ignore trend lines, ignore the trends, stick to the fundamentals and all this stuff, and then you see a chart like this to where it's just perfectly trading within a trend, and every single little test and everything that was going on, you could have traded on all of that. Now that we're this far into it, we can't expect it to last forever. It simply won't. You get a couple tests on the support that you traded, and then it continues to bounce up from there. That's great because that was when you were supposed to be trading it. But now that we've seen this trend hold for since October, so this is almost the exact opposite of what we saw for Alibaba. Alibaba since October 2020 was on a downtrend. AB since October 2020 on a solid uptrend. Very nice price channel here. Now what is likely for this stock? I'm going to have it on my bank it list, and that's because I'm not expecting a major pullback, but we would look for it to consolidate here and at least go sideways. I'm not expecting a breakout for months for this stock. So 46, 47, that could be a ceiling for the stock. And no, I'm not just using the top of the price chart. It's just because it's going to be tough to break out to the upside of this channel. Now, if it does, that's extremely bullish, and heck, the stock can continue to run from here. But for now, this drop, testing the support on Tuesday, like I said, I already see the closing prices. It was back up to about $45 a share. So it's holding within this price channel for now. I'm just not expecting it to get back up to 48, 49 over the next couple of weeks. I think this volatility that we're seeing is going to set the tone for this stock because it's been on such a nice run higher. I mean, it's almost up 50% in less than a year. And a period of consolidation would be expected, and then a breakout. And just a short-term signal to kind of let you know if this is really going to start taking off. You can just connect the recent highs here for the stock, and that really gives you a good idea of what traders will be watching here as prices go up. Now, we can get back up to this price range just in a matter of days. At this point, we're at 45. This is just up to 47. So we could hit this pretty easily. I'd love for it to break above that, and then I would use that key trend line right there, the horizontal trend line, around $47 a share as my major support to track. So it's on the bank it list. I'm just not expecting a big move here over the next couple of weeks. Once we get out months down, I'm expecting another upwards breakout and another 50% or so rally. So this one's definitely on a bank it list, and it's one that you want to keep an eye on. So that's all for my quick takes today. We had 5 stocks. 4 of them were on my bank it list. A few of them were a little iffy. One like this is a very strong bank it stock on my list that we had in Alliance, our last stock that we looked at. But again, it could go through this little consolidation before it breaks out. But by having these key trends, these key supports, like you saw in that last one, the price on Monday fell right to where the stock had a major support. If you had bought it, you'd have been up the next day, benefiting from the rally that's taking place. So knowing these levels, knowing where the supports and resistance are, where traders are willing to step in and buy the stock at, it's hugely important, especially rolling through volatile periods like we are today. So I hope you found this video helpful. And of course, leave me a comment. Let me know what you think of the video. Let me know what stocks you want to put on my radar. And just if you enjoyed the video, give me a thumbs up to let me know. So until next time, I'm Chad Shoup.